Hi everyone, it's Jack about another video. Today I'm going to be talking about Blocking, previously known as Square of course. This company has just released an earnings report about an hour ago. When I dive into the earnings report, to give you my insights into what I think of it, talk about its valuation, its future prospects, and whether I think this company is a buy, sell or a hold going forward at today's prices. Over the past year, the company has really struggled, down 67%. Part of this due to valuation, general market decline in high valuation, high growth businesses because of interest rate rises and inflation. However, part of this is due to the business slightly underperforming in my opinion. It's decently off its 52-week low of $56, so if you'd have bought then, you're looking at around a 50% gain as of right now, but it's still massively down from its 52-week highs, which was all-time highs of around 290. That's a 67% loss in the space of a year. Really rough. A lot of shareholders deep underwater on this one. I still think it's a fantastic business, although this earnings report leaves something to be desired at least. And it has, of course, been a fantastic compounder over the last 5 years, up 261%, despite this massive haircut it's taken recently. The first thing that should jump off the page here is net revenue, which was down 6% year over year, primarily due to loss of Bitcoin business. Excluding Bitcoin, it's up 34% year over year, which is an excellent result in my opinion for the rest of the business. Now you look at this, it's actually quite complicated how Square reports its Bitcoin revenue. Bitcoin revenue was $1.785 billion for the most recent quarter. The previous quarter last year it was $2.7 billion, but of course this isn't revenue, this is total transaction costs basically, and they subtract cost of the revenue, which is the Bitcoin cost, which in this quarter was $1.744 billion. So it's a bit complicated, but a massive change of about $1 billion on both ends from Bitcoin revenue. And this is to be expected. The crypto market is at a real low right now. Confidence in this market is down. Transactions are reduced. So this is roughly to be expected. And to be honest, this Bitcoin to me is a Jack Dorsey obsession. I'm not so much of a fan of Jack Dorsey as an owner-operator. I think he's obviously a very intelligent man, but as a CEO, I'm not the biggest fan. You see what he did to Twitter, it's a bit of a mess there. In terms of the rest of the business is growing 34% year over year and recording better gross profits than normal, which I'm very happy to see. Buy now, pay later, or the afterpay acquisition essentially, contributed $208 million of revenue, but provided $150 million of gross profit, so that's a really nice margin there, around 70%. Subscription revenues for Cash App are clearly the biggest winner here, up 60% with absolutely excellent margins. You can see subscription base and services revenue around $1.1 billion for the last 3 months, and when you look at the cost of revenue, only $213 million. That's a huge turnaround, around $800 million. You're looking at 80% gross margins here. Fantastic numbers, and this is growing like a weed right now. Cash App is clearly the motor for this business as the economy comes out of into a post-pandemic world. The Square side of the business, and the tablets basically, it's going to come back at a much higher rate in my opinion. But the Cash App is going to be the big driver of this business in the future. I think Bitcoin and the crypto side of this business will come back, but right now I'm very much focused on Afterpay, on Square, and on Cash App. And all of these business segments are performing admirably. Anyone who's read this report will see a lot of talk of gross profit. Now, there are positives and negatives to this. They talk about gross profit because they're not recording a lot of net profits, but they talk about gross profits a lot, and they're going up a decent amount year over year. 29% year over year growth, $1.47 billion in gross profit for this quarter. That was roughly half and half from Square and Cash App. Square, $755 million, up 29% year over year. Cash App gross profit, $705 million, also 29% year over year. They recorded an adjusted EBITDA of $187 million, which is significantly reduced from the quarter a year ago. But again, the differences in Bitcoin revenue and transaction, and the loss of this is to be explained for this. On the left, you'll see a report of their actual earnings. There's a lot of different ways to spin this, a lot of excuses, and a lot of losses. Adjusted EBITDA of $187 million compared to $360 million last year. That is poor. And adjusted net income per share on an adjusted basis of 18 cents, which is far below last year. That's a roughly 0.31 decrease year over year. Overall, I don't really care about adjusted numbers. We're talking about raw profit, and there's a net loss attributed to common stockholders, $208 million, which is just not good enough. Gross payment volume, on the other hand, was decent. It's now $52.5 billion, a decent increase over $42.8 billion in the year before. Cash App is contributing greatly. Square is processing a lot of gross payment volume. And overall, this segment of the business is really chugging along quite nicely. The only problem here is, when is Square going to be a consistently profitable company? It looked like it had turned that corner, and it's kind of regressed right now. It's hard to value a company like this, and it's hard to get behind a company like this. This is a very mature company that's going to be doing $16-17 billion in revenue this year, maybe more, and it just cannot be consistently profitable. And this is turning very much into the story like Twitter, and it worries me. It worries me, is Jack Dorsey capable of producing a long-term profitable business? Because it's a company that produces a lot of gross profit. If it carries on its current trajectory, it's going to make around $6 billion in gross profit this year, and probably come out with a net profit of zero. That is definitely concerning. Another thing that really caught me off guard, which is a massive concern, is I was just reading through the balance sheet, looking at the cash and cash equivalents. It's a little reduced from last year, but not overly concerning. Total current assets slightly increased from last year. Total assets up 13 billion from last year. What's going on there? Hang on. Goodwill of nearly $12 billion, up from 500 billion last year. That's clearly from the afterpay acquisition. They've massively overpaid for this because they bought at the top of the market, obviously. Well, they bought mostly with their own shares, so it's not the end of the world because that was at the top share price for this, but a third of Block's assets, essentially a goodwill. Wow, that is not a good look. Massively overpaid for Afterpay. Although I like Afterpay as a business, I think buy now, pay later is a decent space. You look at PayPal, they've essentially built it in-house, and Square could have clearly done this. I'm not going to rag on them too much for an acquisition buying with equity at the top of the market. $12 billion in goodwill is not a good look, particularly when it's over a third of your balance sheet. Jeez. And then we get onto valuation, which is actually not that easy to do. The cash flow and the forward price to earnings are pretty much useless because they're not doing these on a consistent basis. We can look at how they're expected to do in the future. The revenue is expected to be around 16 billion this year, which probably this is going to slightly overperform, and it's expected to jump massively to $27 billion in 2024 based on analyst estimates. 15% of future revenue growth rate is expected, and a 22% earnings per share growth rate. Now these would be excellent, but it's still very hard to value this business based on this. Can't really do a DCF because the free cash flow is such a low rate over the course of the year. You can only really look at it as a price of sales and on numbers projecting into the future. It's very cheap on a price of sales basis versus its current history, of course. But again, you could have picked it up recently for $56, so it's not the cheapest it's ever been. It's hard to value a company like this. I'm really disenchanted with this company right now. I think it should be doing a lot better, and I'm really disenchanted with Jack Dorsey as a CEO. I think he's the Afterpay acquisition, the pivot in this business towards Bitcoin, are massive missteps in my opinion, where capital could have much better been allocated elsewhere. Overall, I don't think this is the worst earnings report in the world. The core business grew 34%. That's decent. Gross profit continuing, but I'm not so interested in gross profits when this business just cannot be consistently profitable. They're pouring way too much money into R&D. $12 billion in goodwill from an acquisition less than a year ago. That is absolutely staggering. They massively overpaid for Afterpay, and it's clearly coming out now. The Bitcoin business is really struggling, and it seems like Jack Dorsey's obsession with this, at least in the short term, is not paying dividends for this company. Now, maybe over the long term, I'll be proven wrong. I do believe Bitcoin has a place in society, and I think it'll be significantly more expensive in 10 years. So maybe Square will come good on this point, from this point of view. But I just don't believe in Jack Dorsey as a CEO anymore. And as a Square shareholder, I'm probably right around my cost basis right now. Do I think this is a buy? Not really. I'm firmly holding. I'm not selling just yet, but I'm looking for change in this business. I think the core business is performing really well, but I just need to see more from Jack Dorsey as a CEO. I think he's made a lot of missteps. I'm worried that Square has tons and tons of potential, much like Twitter did. I'm worried that he's going to become Twitter, a stagnant company that produces decent revenue, grows revenue at a decent rate, but just cannot be consistently profitable. And that is what Square is looking like right now. I need to see profits from this company in the future. I need to see consistent cash flow positivity, and then I can think about buying more into this company. I don't think the price is absolutely unreasonable at the minute. I just think it's really hard to value when this company seemingly doesn't care about consistent free cash flow positivity. A $50 billion market cap. Do I think this company is going to be much larger in 10 or 20 years? Yes, absolutely. But do I think we could be in for some short-term pain? Yes, absolutely. The stock is down around 6-7% after hours. I think tomorrow it's probably going to be down even further. So right now, I can't really commit to adding to this position too much. That's not to say in the future, if the business makes some changes, this won't be a fantastic company, because I thoroughly believe it will. I'm holding on to my shares for now. But of course, I'm not a financial advisor. You should do your own research, due diligence, and make your own decisions, not just listen to me. Let me know in the comments below what you think. Like and subscribe if you're enjoying the video. I'll see you again next time.